Hey guys, my name is Nicolette Mashile, also known as the Financial Bunny. Welcome to the Financial Bunny TV. I've been MIA. I do apologize. I'm so sorry, guys, but I'm back to create financial literacy content, and we're going to make it the best, right? Do remember, none of my videos constitute as financial advice. If you are, however, looking for financial advice, please speak to somebody who is certified and registered with the FSCA. Speaking about the FSCA, yours truly, with the Financial Bunny, has been appointed as one of those people who sit on the panel of the Consumer Advisory Panel at the FSCA. So I will be looking out for you guys in terms of anything you want to complain about. When it comes to financial services companies, please tell me. I will take it up with them and we'll make sure that the FSCA gets you some sort of recourse. So let's talk a little bit about what I want to speak about today, right? So today I want to focus on two areas in investing that are quite important that I think you need to remember, right? So if you've watched some of my videos, one of the things that you will realize is that this year I wanted to sell one of my properties, right? So it's a 2-bedroom apartment in Douglasdale, ready to sell this thing, and you know what? Crickets. Literally, it is me every single day asking my real estate agent, hello, are we getting any buyers? Is there some movement when it comes to the property? Are you even showing this thing to anybody? You know what I mean? And I must be honest, I'm very impatient. The two things. One, I was very impatient. Two, I really needed this property to sell because I needed the money. Let's just have a fair conversation. So I needed this property to sell very quickly. And look, I did have an interest, right? There was this very audacious couple that signed the offer to purchase, and they were supposed to go out there and find a bond. And let me tell you, scandal. These guys submitted fraudulent documents to the bank. And I'm like, do you know that the financial services sector in this country is one of the top 3 biggest sectors or industries? How dare you have the liver to go and submit fraudulent documents to a bank? A bank. Hello, wait, guys. We're not talking about Kwamam, whoever. Kwamam Ruby. You're trying to get in good to here. This is an actual house you're trying to buy, an actual asset. And you are submitting fraudulent documents to the bank. Guys, please don't do weird things. It's very odd. It's like absolutely odd for anybody to think they will get away with such things. Anyway, so that fell through the water, or through the whatever the saying is in English. So since June, we've been kind of like sitting and waiting to see anybody else is going to be interested. We've received some interest only like this week, right? But I've been waiting. But as I said, I'm very impulsive. I'm very impatient. And yeah, because usually properties take long to actually sell. You must think about it this way. Forget even by the time you have a customer. Just think about the process. The process is you've got to list this property, and then you've got to show it to people. Then they've got to sign the offer to purchase. After signing the offer to purchase, they need to go secure a bond. After securing your bond, you need to start the transfer process going. After that, they need to pay the transfer fees. They got to pay the transfer duty tax if it's over 1 million rand. And then they also need to pay their bond registration fees. And then it gets registered with the bond. Or even before that, the bond home loan will send a bond in approval or an approval in principle. Then they need to come and value the property to see whether or not this property is worth what you are borrowing from the bank, and then putting the money in the property. And then only it goes to the transfer process. After the transfer process, my lawyers then need to go and lodge it, and only after it is actually lodged and registered at the deeds office, only then do you get paid. Do you see the process? The process is long. So it's important to understand this, especially when you are going to be investing in property as an investment asset. Because the day you need your money, make sure that you understand that the process takes long, so that you don't put yourself in a situation where you're doing what I did, is buying certain things in your mind with the money that you're going to get from the sale, and then realizing that it might not happen that you actually sell this thing as quickly as you think you're going to sell it. That is one of the first things that I want to speak about, and that is understanding that there are liquid assets and there are illiquid assets. So your liquid asset basically is an asset that can quickly convert into cash. So for instance, you buy livestock, you invest in livestock, and then you sell it. The quicker you can sell the asset and can turn it into hard, cold cash, that makes it a liquid asset. What is an illiquid asset is an asset that takes a little bit longer for you to be able to actually convert it into cash. Like your property, brick and mortar, takes a whole lot longer for you to move from asset class to getting your cash. And sometimes what you may find is that if there is no contract of sale in writing, as you are waiting, there may also be some sort of up and down in terms of the value of the property. So like I said, when the bank does the evaluation, sometimes they may come back and say, well, okay, you've listed the property at 880,000 Rand, and the client is looking for a bond of 880,000 Rand, but we don't think the property is worth 880,000 Rand. We think it's now worth 850,000 Rand. I mean, it doesn't really happen. It's obviously a unicorn, but it can happen where the asset, it might not be in property, but there are other asset classes where that illiquidity can actually create a problem for you in terms of the value of the actual asset that you're trying to sell. You may see that there's a price volatility, and by the time you actually are able to sell it, the price may have knocked down, right? So very important for you to understand this whole process or this whole phenomena of liquid asset and illiquid assets. The second part that I want to speak about is this phenomena of buyer's market versus a seller's market, and what exactly is it? If you remember, if you're an economics student or you did economics at some point in your life, one of the things you learned was the law of supply and demand. And if you want to fully see it in action, this is the place where you can see it. The property market is a great space for you to be able to see what and how does it look like when the law of supply and demand is in process. Because when we talk about a buyer's market, we're basically talking about there being a whole lot more supply of property in the market than people who are looking and willing to buy it. Right? So let's take a specific subcategory of the market, of the property market. Let's take 2-bedroom apartments in the north of Johannesburg. If you just go through Property 24, Private Property, Pam Golding, all the guys that list properties, and you look for a 2-bedroom apartment in the northern suburbs of Johannesburg, you're going to find lots and lots and lots of property. That means that the supply of that type of property is just so much, it actually supersedes the demand for that property or that subcategory of the property. This throws in a very big curveball for sellers, because when the supply is high and the demand is low, the customer who's demanding it then can influence the price and the terms and conditions of sale. So basically, think about it. If somebody think about Small Street. Some parts of Small Street, they're selling socks and panties. And there's like 5 suppliers selling the same thing in literally one street. Amasokis, 20 rand, amasokis, 20 rand, panty, 20 rand. And they're literally all selling the same thing, right? As a buyer, you literally can walk down, come back all the way up, and then find the supplier that's willing to negotiate with you, right? So you're not going to pay 20 rand, because if they're all saying 20 rand, unless obviously you're in a quick rush. But, buying property is not like buying socks and panties, on Small Street. It's not the same thing. But the reality is that if it isn't a buyer's market, the reality is the buyer is the one who's going to try to negotiate terms and conditions. So the sellers have to differentiate themselves, right? So you need to say, as a seller of a 2-bedroom apartment, how will I differentiate myself? And generally, for most people, when it comes to property, I really just want to differentiate by buying low. Right? I want to buy low as a property investor. So I do want to buy the intrinsic value of the property or at the intrinsic value of the property. But in reality, when the supply is very high, or the demand is when I'm in the demand and I'm the customer, I'm trying to buy as low as possible. So if you're a seller that's willing to sell me as low as possible, then I'm going to make the deal with you. So that's essentially what a buyer's market looks like. Now, there are many factors that can create a buyer's market. And just because it's a buyer's market in northern suburbs of Johannesburg in the subcategory of 2-bedroom apartments doesn't mean that is the blanket market sentiment for the property market in South Africa, right? So for instance, you may go to Cape Town and find that 2-bedroom apartments are actually so low in supply that, it's a seller's market there. The sellers get to make the decisions in terms of how they're going to influence the price and what their terms and conditions are. It's a take it or leave it from the seller to the buyer. So just because it is a seller's market in Cape Town doesn't mean it's a seller's market in Johannesburg, and vice versa. Just because it's a buyer's market in Johannesburg doesn't mean it's a buyer's market in Cape Town. So it's also important to understand what are some of the things that create this buyer's market or a seller's market, right? So there are various factors. The two that I want to speak specifically about is one, geography. So I think I've kind of tapped into it by speaking about, Cape Town versus Johannesburg. But I think to add more to it, it's also a buyer profile, right? So you may find that in the people that are currently buying right now are new families, people who are starting out, they're looking for 2-bedroom apartments, 2 bathrooms, or maybe 2-bedroom, 1 bathroom. But that means that, everybody that's got a bachelor or a studio might find themselves in a buyer's market, because there's going to be an oversupply of studio apartments and 1-bedroom apartments because nobody's buying them. Right? But if you go to a Cape Town, for instance, you might find that that's what people are trying to buy. First-time workers or graduates are buying bachelors or studio apartments, because that is like the easiest way to enter the market. So that's the first one that I want to speak about. The other thing that you've got to think about also in terms of geography is really what type of subcategory of property sells in specific markets, right? So if you move closer to where I'm from home, that side, those provinces where people are not necessarily moving there for work purposes, but they're establishing families, they may be looking for more family homes. So you might find that if you do have the 2-bedroom apartments, there's just an oversupply, because there's many of you guys selling those because people are not really looking to buy those. They're looking for more family homes. So these are things that you've got to take into consideration. The other big factor is obviously the interest rates, right? The ability for customers to actually access the funding to buy these properties. So if the interest rate is high, and let's say in 2020, you could afford and qualify for a bond of 1.5 million. And now because the interest rate is so high, you can only qualify for R1 million. It means that you're not buying the 1.5 million rand property. So that in itself creates the law of supply and demand to skew in a specific space, depending on obviously the subcategory that you are in, right? Of property that you're looking to buy. So you may find that people are having to settle for 2-bedroom apartments, not because that's what they want, but because that's the bond the bank is willing to give them, because the banks are being very cautious, especially with high interest rates, because they don't want people to find themselves in a situation where they're going to be defaulting, right? So it's important to understand the role that the interest rate also plays on whether or not people have the capacity to be able to buy certain subcategories of properties, simply because that can create a buyer's or seller's market. It can shrink or expand the inventory that is available, right? So that's quite an important one to also think about. I think maybe just to add on other things, it's really like economic factors that are existing, people's buying power, people's ability to access loans, and people's sentiment also around whether it's a good time, do they buy or do they rent? You may find that people are very nervous about what the economic outlook looks like. So instead of committing themselves to a 20, 30, 15-year bond, they will rather just rent out for a couple of months or a couple of years while they suss out what the economy is going to do. And because of that, you may find that if people are looking to maybe leave the country and they need to quickly sell, they are flooding the property space with those apartments or with those houses, and it's creating a buyer's market because the inventory is so much, right? So that's the other thing. People leaving the country and selling. So selling factors. What is the reason why somebody is selling could also create a buyer's market? Because if there is no investor confidence and people are worried about the economy in South Africa, they're going to be dumping their properties. And if you have a lot of people dumping their properties at the same time and just not enough buyers, then you're going to find yourself in a situation where you're creating a buyer's market. Then, I said two things, but I'm going to add another one. Price inflation. Let's be fair. South African properties are very much highly priced, right? Sometimes you have to ask yourself, is this property even worth the price that it's priced at? But sometimes people don't understand how price inflation and pricing works, and that's what throws them off. So you might find that they've got properties that have been listed for years or months simply because their pricing is actually really incorrect. For instance, if I'm going to a Baldwin estate, and I'm buying a property at 1.2 million, right? So I bought a property 5 years ago at 1.2 million. Now I'm looking to sell this property. So I look around and everybody else who's got a similar property as me has priced their property at 1.4 million. But now I'm sitting there thinking, if I price my property at 1.3, I'm just really not going to be able to cover my bond and all of that stuff and to cancel the bond and So I'm going to price my property at 1.6 or 1.7 million. right? Now you can get that, you can do that. You might even be lucky to get a sucker who's willing to buy your property at 1.6 million, despite the fact that there are properties which are similar to yours that are in the same estate that are going at 1.3, 1.4 million. But what could happen is that the bank will come and do the evaluation, and the bank is like, nah, actually this property is not worth 1.6 million. So those are other things that you've got to also contend with when you are investing in property and understanding the asset class and how it actually works and what are some of the things that influence whether it's a buying decision or whether it's a selling decision. People always talk about timing and that you can't time the market. We usually love using this saying, especially when it comes to stock market, because if you can time the market, it means that you've got some sort of insider information, and we know insider trading is illegal, right? So don't do that. But of course, there are factors that can tell you when is the good time to buy a certain stock or whatever, which is not necessarily insider trading, but rather you really doing market analysis. So with property, it's also a similar experience. You've got to do the market analysis to know these things like, okay, it's a buyer's market in this specific area, in this specific subcategory, so maybe it's not a good time for me to sell. Or actually it's a seller's market, good time to sell, but maybe as a buyer, it's not a good time to buy because there's an inflated sentiment when it comes to the pricing of these properties. Sometimes you've seen inflated prices simply because of a street name or a location of a street. You know, I look at sometimes 2-bedroom apartments in Bryanston versus 2-bedroom apartments in Douglasdale versus 2-bedroom apartments in Randburg. And I'm like, you know, so it happens quite a lot. And I guess it's really about understanding how to analyze the market for you to be able to win. And we want you to win when it comes to investing. I'm going to leave it here because I'm getting a bit tired. You guys know I've been struggling with my health, but anyway, that's a story for another day. I am getting a bit tired. So I'm going to leave it here, and I'll see you guys on the next one where we speak about something else, something different on property. Mwah.